Welcome to the Happy Cows Eat Smart podcast brought to you by Nobis Agri Science, where your dairy business is their passion. This is Dr. Lawrence Jones, and I'm recording this on September 18th, 2025. So we've just receiving the milk checks for August, and I thought that you might be interested in how the contract came together. So this is the last year, and it's been a wild ride. 6 months ago, we were about $1.07 higher, and this one as high as 1983 and as low as 1707 by the time it settled in here. And we're just getting ready to finish up September, and that's another wild ride here. And it's bottomed out here just recently and trying to come up a little bit. In October looks about the same way in terms of wild rides. So your milk truck should have just came, and it's up about 2 cents, I'm figuring, per hundredweight. And the way we've calculated that is your components actually came up. Fat's up to 411, proteins up to 320. However, other solids came down just a fraction of a piece there. Now on prices, fat price came down, protein actually came up a little bit, other solids came up a bit, and PPD actually came down. Now compared to your statistical uniform price, that was 1948. Now the statistical uniform price at the pool is the number that I've got here. Now, there is going to be a market adjustment if you're not at Cuyahoga County, Ohio, and that's usually about 20 cents. So you should be looking at around 21 and change. So here's our statistical uniform price kind of plotted out over time just to give us a benchmark here. And it's not a bad price compared to what we've had. Again, we were much higher here in 2022 and higher here in 2024, but by and large, majority of the points are below that. As I said, the fat prices came down about 12 cents to 273. Now we're going to be printing some numbers that are quite a bit lower, the 220s, 230s, with butter prices kind of falling out of bed here. And part of what's going on is your components continue to go up. As I said, this month was 411. That was up from last month. But a year ago, you were 405. So again, just a continue uptrend in percent fat. Protein prices came up 9 cents to $1.96. It's off of our low last month at $1.87. Now remember, protein prices will always be a bit higher when fat prices are a bit lower because cheese has both casein and fat in it. And so the way that the calculations come together, protein is the residual when you take away the fat. And so when fat goes down, protein goes up. And we're going to be printing some good numbers in here, 250 plus or minus a little bit. Protein's also coming up 320, as I said, up from last month and up from a year ago at 317. Now this is going up, but not nearly at the rate that fat is going up, but protein does continue to increase. Other solids are always about 5.78 to 5.8, so I didn't look at the change in those, but the price came up about a penny. Now whey is very strong, and we should be keeping other solids in that 30-cent plus or minus a couple cents here. And these were printed as of yesterday's closes. So why did your PPD go down? And that's always kind of an interesting question. Last month we talked about the fact that PPD is nothing more than a difference between the statistical uniform price and class 3. So in this case, the PPD is going to decrease whenever the statistical uniform price decreases more than class 3. So statistical uniform price came down 19 cents, class 3 only came down 8 cents. That says that there's like plus 11 cents, and that's exactly how your PPD changed. The other thing that can change PPD is depooling. Right now, order 33 is not depooling. You're at about 22.5 million pounds of cheese a day. We look about a year ago, we were always in that 22 to 23. And our peak has been at 24.8, so this looks very normal. We haven't been depooling a little bit here in the end of 2024, and then quite a bit back here in 2021. Now, class 4 is a little bit different. We only put about 5.4 million pounds a day into class 4. We've been as high as 11 and change a couple different times. So I suspect we're depooling about half. Now, if your co-op did depool, you're going to receive a separate depooling check. And if they did not, well, you're just going to get whatever the federal price was. So what's likely to impact your milk check in the future? That's kind of always the big question. And today's been a crazy day on the market. We're down about 40 cents from the highs of the day. But right now it looks like class 3 is higher than class 4 all the way through the June of next year. And so these are the actual values. And I did include a chart here that has the DRP value, which is nothing more than 95% of the value. But the DRP for class 4 is around 1597 for the next year, and for class 3 around 1634. So there is an interesting discussion about how you should be looking at DRP. Conventional view is that you should be buying DRP relative to the percentage of the different classes that your milk check are made up of, or is in that federal order. But what we've been working on is not actually doing that, but actually buying the DRP for the class that we think is going to fall the most. And for example, one of my customers actually bought DRP on class 4, even though class 3 was the higher of, and that's fallen so much that he's made a fair amount of money on that. Now, that's not a classical hedge, but again, if you want more information on that, we could talk about that sometime. All right, so let's stand back and look at the bigger picture. I am very bearish in the market. Right now, I'm a -9. This chart runs from a -10 to a +10, so it can tell you that I'm extremely bearish of the market. And so let me tell you kind of why that is. Well, the first one is more cows. And so this is the July cow numbers, 9.485 million. This thing has just gone skyrocketing. And basically the processors are begging producers to increase their herd to meet the plant needs. Now, what that does to the consumer prices is a whole different discussion, but definitely more cows. We're going to get a milk production report on Monday, and I'm thinking we're going to be above 9.5 million, which would be the high that we had back here in 2021. Part of the reason that I have this prediction on cow numbers, it is the slaughter numbers. The last data we have is for 8/24. We're only slaughtering around 52,000 head a week, and traditionally a good number is 60. Again, back in 2023, we were pretty close to 60. I like to put this onto a cull rate basis, which is nothing more than the cull number divided by the number of cows, kind of treating it as an individual herd. And what we find is anytime that we're below 30%, this herd is going to be expanding. And so right now we're running around 28%. So I'm not going to be surprised to see, up to, 9.5 million cows in this next report. Milk per cow is continuing to increase. We were on this tremendous uptrend. We kind of jumped back in 23, but we have to acknowledge that the data we got is a record for milk per cow for July. Fat percentages continue to go up, and again, the data we got for July is a record. The country is doing exactly what you guys are doing, is more fat, more protein. As a result of that, we're making more cheese. And this was a record for July cheese production. Now, the one good part of this is this cheese production has been growing more in the Italian type cheeses than the cheddar type cheeses. So that's going to help support the block prices a little bit. But again, more cheese is still more cheese. So the number that I like to look at is the rolling demand versus the rolling disappearance. And what's interesting about this graph is that for a while here, we've been taking more cheese away than we've been making. And the reason that is the way it is the exports. The exports have gone up. I think domestic demand has actually been fairly flat. These have just recently come together, which says that we're making as much cheese as what is disappearing. But in actually July, we had a disappearance for the year of 39 million pounds a day, and we made 39,183. So again, it looks like it's about in balance. We've got almost 36 days of excess cheese in the cold storage. But there's been no other time when that blue line has been above the black line. And so that was all due to exports, and we were pulling cheese out of cold storage. Like everything else, butter production has been on this uptrend, and we hit a record for butter production here in July also. So again, the bearishness on all of this is the fact that we just got more product and not necessarily more consumers consuming that product. The other piece of this is exports. And you say, well, exports have been strong. And in fact, they have been. And we did hit a new record for exports per day in July. So that is a very good thing. One of the concerns is that it actually came down a little bit in July. And so there's some kind of question mark on that. And if we go back to July and just kind of put things into a perspective for you, our cheese price was $1.76. So that's basically cheddar blocks. We were exporting at $1.95. Now the exports came down from 11% to about 7%, but at the port it was $1.95. And the difference between these two is partly the transport to get it to the port, get it in a container, get it ready to be shipped. At the same time, the global dairy trade was 208. So again, there's probably another 10 cents off of exports to where we're selling it actually on the world market. The only other number to put together here would be the spot market, which is $1.64. And so again, that's how you kind of follow this together. The spot market drove the futures price. The futures price is kind of driving the export, and the export is consistent with the global dairy trade. Just to kind of put things into perspective, this was the last global dairy trade that we had on the 16th. This is today's spot market, and cheddar is $2.19. It's up 5 cents, so that was good news on the global dairy trade. And this is green because we should be exporting a fair amount of cheddar with the spot market at $1.68. So the last thing, I was looking to be bullish on the consumer sentiment because it was going up. But the latest data we have is very much going down. If we actually look at the data for September, this is the preliminary data. We'll get a little bit more better estimate here soon. But it's 55.4. A year ago, we were 70. So again, that says that consumers are not happy about the economy. Turn to grains for just a minute. This was a good week, and it ended on the 12th of last week. For corn and beans, they were both up. And one of the questions that I'm posing to everybody is, have you locked in your bean and corn prices? Because this 12-month average is kind of headed out of our channel here, and I think there's probably more upside risk than downside risk. But as I was sitting here telling you this on today's market, which is, this is at 1 o'clock this afternoon, corn is down a fraction, and bean meal is down $1.33 for the next year. So again, take a look at that, see if you need to lock in something. Again, buying calls is a good way to kind of lock in your floor but not have a downside risk. The other one to talk about is feeder cattle. It's at the 339 for the next year. And if we look at the October feeder cattle price, this was clear up to 365. This is extremely strong, and right now we've got green black calves going for somewhere around $1,500. And the other thing you ought to take a look at is one of my producers are telling me that they can lock in $1,400 LRP, livestock revenue protection, for a cost of $35. And so that again kind of takes an interesting look at one way to lock in that price. Finally, just kind of finish up with drought, because I always like to see, what you guys are kind of dealing with here. Southeast Ohio's got a shortage of water, and it looks like kind of right along that band around the top of the thumb there. But I follow Eric Snodgrass pretty close, and this is the graph he has this week. It looks like we are going to have kind of a low that comes in and provides some of that much needed rain, but again, that's kind of mess up a harvest here just a little bit. So that's what I have for this update about Order 33, and please contact Nobis Agri Science if you've got any questions about a whole lot of things, because they definitely go beyond nutrition.